And when we had like family dinners with my parents and my sister, who also is a startup co-founder, it was board meeting basically. Back then at Stanford, like I used to study like computer science and machine learning. I thought it was not that interesting, to be honest. I think I would have short machine learning, and 10 years after, you know how wrong I would have been. The mere fact of having those meetings forces you to work on the right things. And so one of the things that Morgan and I didn't want to repeat is a model where is a company where you need to hire to scale. The topics, the challenges moved from product to organization. How do we build a hiring machine? How do we build a firing machine? I've done 0 to 0 too, huh? And 1 to 0 as well.
But you've done. Bonjour and welcome back to The French Product. What if the biggest risk to your startup isn't the competition, but your own four walls? Most founders spend months building in secret, only to launch to total silence. Today, I'm sitting down with Jordane Giuly. He's a Stanford-trained engineer who co-founded Spendesk, which is one of France's most iconic unicorns. And he's now the CEO of Defacto, a company where they've already moved over €1 billion in credit. Jordane is pulling back the curtain on why he walked away from a unicorn, how to build a team that scales without massive hiring, and what he calls the accountability hack that ensures you never build a product nobody wants ever again. If you want to know how the next generation of finance is being built from the ground up, this is the episode for you. Let's dive in. Jordane, welcome to the podcast. Thank you so much for being here.
Thank you. Thank you for having me.
So you started out, you studied at Stanford, so started out in Silicon Valley. I think remembering from your LinkedIn that you started out doing machine learning at TripAdvisor, was it?
Yes.
So after that, you co-founded a company. So, I mean, this is in your genes. What made you build things in the first place?
So this is right to say that, so I finished my school, it was 12 years ago.
Mm-hmm.
Back then at Stanford, like I used to study like computer science and machine learning, and I used to take classes from Jordane Giuly, who is like one of the, I would say, gods of machine learning. And I remember that back then, I thought it was not that interesting, to be honest. It was mainly about like trying to analyze, doing some sentiment analysis on tweets. Mm-hmm. And I was like, oh, it's not that interesting. So back then, I think I would have short machine learning, and 10 years after, you know how wrong I would have been. So, anyways, so I'm an engineer. I had 4 professional experiences so far, and 3 as a startup co-founder. And so the first one was right after school, where when we decided, my best friend and I, to launch a company in France. So we moved back from the US to France. And I think I got this, so both my parents are entrepreneurs. Mm-hmm. They built their own, I would say, SaaS for banks in 1995. Okay. Fully bootstrapped, highly profitable business. It grew to 50 employees until 2010, and then they stabilized the company. And so I grew up in an environment where with entrepreneurships you can reach freedom, basically. Wow. And when we had like family dinners with my parents and my sister, who also is a startup co-founder, okay. It was board meeting, basically. Uh-huh. I heard my parents talking about hiring, about strategy, about legal, about, like dealing with banks and stuff. And so I think I just got this image, so basically.
This is interesting. Like I'll think about that for my own son. All right. And so that quickly moving to you founding Spendesk at some point that went on to become one of the French unicorns. What was the problem that you found, and how did you get into founding that company?
Yeah, so as you mentioned, right after school, we launched our first company with a very good friend of mine. We failed in a sense that after 2 years, we developed a product that nobody wanted.
Mm-hmm.
After 1 year and a half, I came across Paul Graham's essays on how to build startup, and I'm 1 year and a half late.
Yeah.
I should have read that at first. And I think one of the most iconic advice is get out of your building, basically.
Yeah.
Which we didn't do. We stayed in our building, face to face, coding the product. It was in the newspaper industry, and when we launched, we didn't have any product marketing. We didn't have any user whitelist or like a beta tester, etc. And so we just launched, and no surprise that nobody came. And then we tried to make iterations to make the product useful. But anyways, so that was some kind of failure, even though it was a good learning experience. And my former co-founder is still one of my best friends today. He's also a repeat entrepreneur. And so I say hi to him. And so then for my second, I would say, experience, I wanted to launch a company again, try to achieve some business milestones.
Mm-hmm.
And so I came across eFounders, who is now called Hexa, which is a startup studio. And basically a startup studio for a guy like me back then, 25, 26 years old, no money, no ID, no network.
Mm-hmm.
It's a very good, I would say, entrepreneurship school.
Yeah.
And in terms of model, you get to work with, I would say, very skilled people, like Thibaut Elzière, for example. They pay you a salary, but they get 50% of the equity of the company that you launch.
Yeah.
So it's like there is less volatility in your ROI function. You're cutting crazy upside, but you're also cutting zero downside. Anyway, so I met them, and then I met what would be my future co-founders, Rodolphe and Guilhem. We were starting working on a product based on virtual cards. And I'm like, okay, this sounds cool. And basically, we launched Spendesk like this. So we built, I would say, corporate cards for SMEs because we both had, my co-founders and I had some kind of pain points in our previous experiences, where as an employee, when you need to, engage for a purchase, usually it's your own money, and then you need to make an expense claim.
Yeah, true.
In my previous company, when I had to, for example, pay for, AWS server, I used to take my personal card and then do expense claims because the CTO would be off somewhere and wouldn't pay for the AWS servers that I wanted to do tests with,
Yeah.
And so we launched like this, and basically, so we launched this spend management solution for SMBs. And back then, it was pretty innovative in a sense that it was a piece of software, with where you could invite members, customize some approval workflows, have some integrations with your accounting system, so like financial software and with basic features. But we also embedded payment services, i.e. cards, and this was something very new. So I think it was one of the first embedded finance software in France, and we grew quite significantly to reach the unicorn status.
Okay, and you said that it was one of your pain points. So how did you get out from the building and actually because it sounds like it's personal. It was a personal pain, but how much did you learn from your past experience and actually go see actual users?
So it was I would say it was a light pain point that I had. But that being said, it was shared by my former co-founders and the startup studio, whose value is also the network that they've built. And so when we started building on this idea, it resonated within the studio guys, if you want. And then they helped us get in touch with what would become our first 50 customers. And we basically, had chats with, so it was mainly like startups in our, other French startups in our network. And so we went on there, we discussed with the CEOs, the CFOs, head of sales type of guys on their, I would say, expense management, purchases problems, and that's how we've built the first version of Spendesk. And so basically we extrapolate two user needs. One, be able to give I would say one-off virtual cards for people to make online purchases. Mm-hmm. And second, as a finance team, be able to track what's going on. And so we built the MVP like that. So very simple piece of software, very simple financial services, payment services embedded in the software. And we grew our first probably 100 customers like that, with constant feedback loop on like, hey, I want more complex approval workflows. Hey, I want multi-currencies. Hey, I want subscriptions cards for my monthly recurring payments. Hey, I want physical cards for my travel and expense purchases. And I think we grew the product like this with constant user interactions and feedback.
Okay. And so how did you structure the product team? Because I knew that, again, you said that you reached unicorn status pretty quickly. I don't know at what time you actually exited the company, but how did you grow the product team and the product itself? What was your strategy? And based on what you learned previously, what mistakes did you not make that time?
So I was the co-founder and head of product at Spendesk from 2016 to 2020, 4 years. It became, so back then we grew from 3 to 250 employees, I guess, something like that. When I left, we were post-Series B, and then it reached the unicorn status 2 years after. Mm-hmm. So I'm only running after my opportunity cost, not to have stayed in the company, basically. So when I was there, so I started as the first product manager, basically. So discussing with the customers on a constant basis, our first, I would say, 50 to 100, beta users and then paying customers. We had a squad of roughly 5 to 6 engineers, and we quickly hired the first product designer because the product was quite heavy in terms of features. And the user experience was one of our moats. Yeah. So for us, the product design was pretty important. And so back then we grew with like basically one squad. You have like improvements, features that you try to prioritize as you go. We did that on a weekly basis, and we shipped stuff. Then after our Series A, we grew from 1 to 5 squads. And so we hired 4 to 5 product managers, about 4 product designers probably, and each squad had around 4 to 5 engineers. Mm-hmm. And so it was a product engineering team of 35-ish people. We also developed a data team. So we had our first data analyst that grew into a head of data. Mm-hmm. He then hired probably 5 other data analysts who would make analysis for the product, but also the business teams. And so we grew like that. And basically, so we organized into the squads tribe, I think, from Spotify. I think it's the resource where we had basically one tribe per persona. So we had one persona around the employee who needs to make the purchase, and one persona around the finance teams who need control and accounting. And within each tribe, we had like one team in charge of more the payment-related stuff, one team in charge of the more the software aspects, etc. Okay. So we tried to split the work in terms of persona, in terms of domains, and have basically constant squads with a product manager in each one of them.
Okay. And when you get to that level, You said, I'm interested also in so eFounders at the time, Hexa now. What did eFounders bring at that time? Because on one of the previous episodes, I was talking to Enzo, who went through Y Combinator. I think eFounders in France, they've launched three unicorns until now, which is pretty impressive. So the recipe works. And they have some pretty decent companies as well, not just talking about unicorns. So what do they bring? What have they taught you? And today, what have you left with?
So when you start a company with eFounders, you're incubated within their offices, and you stay up until your seed round, basically. So it's from 1 to 2 years, depending on your product, your traction, etc. So I think they bring three things. One is a network of your first beta customers. Thibaut Elzière is one of the most active business angel in Europe. So he has a network of hundreds, if not thousands, of startups that he can intro you to. And those guys are potentially your first customers. And I think Y Combinator probably has also this value of just networks of alumni that could either be customers or testers or angel investors. That's the second thing that Exaā brings. It's a network of business angels, friends of Thibaut, former co-founders of the etc. He knows people who have money, so it's good. And so when you want to start a business but you don't have, I would say, an investor network, it's super handy. And with Spendesk, we did a seed round of I think 1.5 million euro back then. It was pretty significant one, and it was mainly with business angels from eFounders network and from our first customers network too. I think that's the second value, which is less true when you're a second-time founder, because you already have some. Hopefully, you have some networks in where you launch your first company. And I think the third thing, it's in terms of methodology. What I remember is that every week you have 2 recurring meetings with the partner team from eFounders. It's a go-to-market team and a product committee. And so, as entrepreneurs, as founders, it just forces you to constantly think about the 2 main important things when you launch a business. It's your product and your go-to-market. And the fact that you have those meetings that you cannot cancel with people that are a bit external to the business, people that are quite smart, that you don't want to sound stupid, you prepare these meetings. And preparing these meetings, it means that you're working on your go-to-market strategy, refining the pitch, refining the distribution channels. Do I do outbound? Do I do inbound with content, with ads, whatever? And on your product, it forces you to do nice demos, think about the next feature, think about your roadmap, think about product marketing, how your users are going to land on your features, which was something that I was very not familiar with. And so you build features, but nobody found them. It's the stupidest thing. And the mere fact of having those meetings forces you to work on the right things. You could have those meetings with puppets of Thibaut Elzière and Amaury. It would almost be the same.
Okay.
If I may.
No, but this is super interesting. I have I usually give this example for learning languages. I've had to move to several different countries, and I learned the best way I learn languages is by quitting my job and going there and not speaking the language and struggling. And I think that part of, struggle, you have to do things and you have no escape route. This is something that actually works. And I've been applying this. I first applied it for languages, and now I apply it on, technical things where I have to do this. Otherwise, I won't survive, let's say. I think it's super interesting because it's my way to learn, and apparently it works. for as a founder yourself? This is super interesting.
I think it just impose accountability, and it's pretty hard to be accountable to yourself because you could always say to yourself, "I'll do this tomorrow."
Yeah.
And so it's easier to be accountable to someone else. And so I think that was one of the main value that they provide. It's just that those guys are someone else that you want to be accountable to.
Yeah.
Basically.
Yeah, true. And and so so Spendesk hadn't reached unicorn status, but it was pretty successful. At what point do you go, okay, let's do something else and potentially start from scratch again?
So I left Spendesk. So we were it was 4 years after I joined. We were post Series B, so we had raised 2 pretty decent rounds with Index Venture, with one of the most successful VC firms in the world, and the guy that was in charge of us, Dominique Vidal, that was at our board, is also like a super successful guy, and so you learn a ton from these guys. And at that point, so we were like 250 in the team, people, and we wanted to grow even more, etc. The business was growing. We opened new geographies. We were present in a bunch of European countries, and one of my last projects was to open the US. But I guess back then it was the topics, the challenges moved from product to organization. And so in our in our staff meeting, we mainly talked about organizational stuff. How do we build a hiring machine? How do we build a firing machine? How do we build interfaces between teams, program managers, this type of stuff, which are pretty nice, topics to think about, but it was just not the topics I was excited about back then. And so I just started to lose pleasure on a day-to-day, and so I decided to leave. Back then I thought, okay, I'm a co-founder. If I cannot project myself at 200% in the next 4 years, it means that I will not be at 200% potentially tomorrow, and so I need to leave today. So I decided to leave. Back then it was right before my 4th work anniversary, so I was theoretically a bad leaver, according to our shareholder agreement. So it raises some discussions around what would I do with my shares, because it started to worth something. And so we came to a pretty decent agreement for both of us, and I left in good terms, I guess. And then I took 9 months off, to digest.
Yeah, sure.
To try to build, I would say, your energy levels again, because it was super intense. It was also during COVID, so I didn't get the chance to travel that much.
Which doesn't help.
Exactly. But at least I didn't leave the, one day you're in the office, like working 200%, and the next day you're on your couch in pants and working and playing video games. Yeah. Everybody was already playing video games in pants at home. Okay. And so I didn't get this shock, So that was progressive. It was good. And so then 9 months after, when you get energy again and want to do something new, I had 2 big choices basically. One, become a senior product manager in the fintech industry. So like, I don't know, maybe at Stripe, maybe at Ramp, with I think it's a $20 billion company in the US. It was back then a competitor of Spendesk. They grew like crazy. So this type of, I would say, road, or start something new. And I decided the latter because I don't know, you get addicted to the adrenaline, I guess, of building a company.
Okay. And so what was the problem that you actually saw at that moment?
Yeah, so first we decided to team up with my co-founders before, I would say, validating the idea or the domain.
Okay, so it was all about Marco and Morgan.
Yeah, so Morgan, she's a former colleague from Spendesk, so we used to work together back then, and we knew that we got along well with very complementary skills. And Marco was a former friend from school. He also studied in the Valley, and then he stayed 10 years in the US. And when he came back to France, we decided to team up together, and he's our CTO today. So we gathered together, and then we spent some time, I would say, setting the expectations. So we wanted to build something big, something international, something with high entry barriers, either regulation, either capital, or technology. And we wanted to address, I would say, like a super large market with existing solutions. And so when you mix those constraints, fintech was a natural field to explore because we had, I would say, some experiences in this sector, and credit seemed to be the largest market you can think of. Yeah. But pretty untapped by new players.
True.
And like super high entry barriers in terms of regulations, the highest regulated activity. In terms of capital, it has huge capital constraints. Yeah. It's very, I would say, complex in terms of the domains you can touch. So you can touch credit underwriting, you can touch regulation, securitization, APIs, etc. So like there's like thousands of domains that you can spend a life working on. So that's super fun. And I think the last thing is that we wanted to work on I would say a very deep problem on the Maslow pyramid, very basic needs. We didn't want to do like a nice to have SaaS for SaaS companies, basically, if I may.
Yeah.
And so credit is like every company needs diversified source of financing, needs more liquidity, needs more adaptable financing partners on the long run. And we decided to launch something in that area.
Okay, so describe Defacto pretty simply.
Yeah, so what we are building, I think, is the first pan-European credit network that can deliver any financial services to SME in a fully embedded and automated way. So what we do in more simple words, we start by tackling working capital needs for businesses. In Europe, there are the intercompany outstanding, which is basically working capital needs. It's 3.2 trillion euros, which is like, it's bigger than French GDP. And less than 50% of that is currently addressed by banks. And so more than 60% of that is just not addressed at all. And on the solutions that are available by banks today, they are like factoring, credit line, overdraft, this type of product and solutions. And so what we do is that we've rebuilt from scratch credit infrastructure. We have our own lending license, and we can underwrite and originate loans in a matter of seconds, where usually it takes weeks for banks to study, I would say, a company.
Yeah.
And so the premise is that instant working capital that can grow with your needs and with your business.
Okay, and you partner, like the model is actually through partnerships, right?
Yep.
Things like I'm thinking about Conto, for example. I've seen it because I'm a Conto user.
Yeah.
And one thing I don't know how normal banks survive these days, because I'm still amazed that, having as a B2C customer, I've always, used like bigger banks. And then I went pro as a freelancer, and then I saw the differences in things that could be done. So I don't know what your opinion about normal banks is, But Conto, I've seen that you can get those loans that are usually for SMEs, right?
Yes.
So like, let's say at the end of the month, you need to pay your suppliers and you haven't been paid by all of your customers. That's where you come in.
Exactly.
So how did you decide on that model for like partnerships, and how do you make it sexy for those people to, be integrated to their solution?
Yeah. So I think when you have several professional experiences, you get to know what you don't want to repeat.
Yeah.
And more easily than what to do, And so one of the things that Morgan and I didn't want to repeat is a company where you need to hire to scale, basically.
Yeah.
Because that's what we have lived at Spendesk, is that whenever there was a problem, we would, put hiring as a solution. And so that's why we decided to have like indirect distributions with highly leveraged with tech partners.
Mm-hmm.
And so today we integrate within neobanks that are focused on payment services, account, debit cards, etc., and want to offer credit to their customers. We also integrate with accounting software, financial operating systems like the Penny Lane, Axonote, Libeo, those type of guys that want to embed more and more financial services on top of their software to offer comprehensive solutions. And we also integrate with B2B marketplaces that put in relationships B2B buyers and sellers that want to facilitate payment terms for both of them. And we work with, for example, with Malt on that. And so I think it was two types of reasons. One, because we wanted to, and second, because we thought it made sense. And two reasons for that. When we studied the market of factoring, short-term financing solutions, one of the biggest problems that banks have, it's cost of acquisition. To attract customers, you need to put a lot of money in branding, in Google ads, in this type of stuff. And so we're like, those the penny lanes, the contos, etc. They have already done the job acquiring these customers, and so potentially it makes sense for us to. So it definitely makes sense for us to be integrated in those guys, and reciprocally, these solutions, they offer more and more, I would say, comprehensive SaaS to help you manage your treasury, your stocks, it's like mini ERPs for SMEs, and they want to aggregate more and more services. Starting 2010, you have the category of banking as a service providers, like the Marqeta, Swan, Trésor in France, that have been there to allow you to embed payments. And so we want to take it further and allow you to embed lending. And so for the distribution actors, it's a more comprehensive, I would say, suites of features. It's additional revenues because it's a way to basically monetize any B2B transaction.
Okay. And so I've talked to many people who have worked with you or know you. I know that you're really good at making fast and fair decisions, and that makes sense with everything that you said about not wanting to talk about organizations just hiring, firing. This is not what you want to do. So you also talked about getting out of the building, talking to more people. I'm wondering how did you think about being compliant and giving an answer in terms of seconds when banks were getting weeks? What was the trigger, and what did you do very quickly to say, okay, we can maybe do that and still have something that makes sense, not scare the industry? Because come on, let's be honest, that was a risk. What did you do to test it out, and how did you validate that hypothesis?
So I think first of all, it's this is something that we wanted to achieve. We're like, okay, you're an SMB, you have potentially like a seasonality in your activity. Maybe you grow like 40%, 50% year over year. And so you need a solution that can assess your business as of today and not as of your past accounting statement, which is 1 to 2 years old. And that's what traditional underwriting is about. It's about assessing you as a business based on your past 2 to 3 accounting statements. When you're a large company growing 5 to 10% year over year, you 1 year ago is 90% you today.
Yeah.
So roughly you today, basically. But it's not true for SMBs. So that's one thing. And so we're like, okay, what we really want to offer is just like basically giving the ability to SMBs to get an answer like as fast as possible. And in B2C, when you're like doing this like buy now pay later type of thing, you get an answer instantly. And when we wanted to bring that level of experience to the SME world, and so we just like built our system with this constraint to start with. And so it means that it means that you need to automate basically the whole value chain. If you want to answer in a matter of seconds, is that you need to automate data collection to do your underwriting. You need to automate underwriting. You need to automate KYC. You need to automate loan contracts, payments, etc. And so I think one of the big bets that we've made is that we internalize all of this. So that's what we are the only B2B fintech with a fully proprietary underwriting. That's why we have our own lending license delivered by the ACPR, because otherwise you would rely on an external provider to do your scoring or to do your KYC. And this guy would become bottleneck in the user experience. And we lived that experience at Spendesk, and I didn't want to leave it again. So we built everything in-house from scratch, first of all. Second, the biggest bottleneck in banks, it's underwriting. It's data collection and then assessing those data. I think we are pretty lucky because we have two, I would say, tailwind effects to help us achieve what we want to do. It's one, regulation. So in Europe, you have open banking and upcoming e-invoicing that allows you to access in one click bank transactions from your customers, and tomorrow their receivables and their payable invoices. And that allows you to gather very granular and, most importantly, very recent data in a fully automated way.
Yeah.
So there's one thing. And second, it's AI and LLMs that allows you to, for example, parse documents in a fully automated way, categorize transactions like, is it revenues, is it indebtedness, is it a delinquent transaction? So we've built models to do that. Also LLMs to help you, for example, accelerate collections, send the right emails with the right tone based on the historical data of with your customer. And these two pieces, like more granular data and ability and new technology to process this data, allowed us to build our first fully instant underwriting models.
Okay. And when you speak, it sounds like every time there's a barrier, you just go like, why aren't they doing it? Let's do it. Let's build it. Is there any failure or something that you thought you could do and that you realized, okay, this is not the right path, or this is not the right thing we should be fixing right now? Because it almost seems like every time, there's a barrier, you just go like, yeah, okay, let's build it, and why not? And I mean, you've been pretty successful, so it works, but it's amazing. Like, is there any counter side that you'd want to share?
So it's the, how do you say, it's the tip of the iceberg, huh?
Yeah,
hopefully. Because when we launched, we were like, would a company accept to share their financial data to like a Defacto? What is Defacto? It's like a new startup would they do this? At first, it was no. And then so we had to build like a brand. We had to build trust. We had to build the fact that we are licensed is a great leverage to start building trust with our customers so that they would share their data. And so now they do. At first, there were like good customers are more reluctant to do that. So that's one thing. Second, sharing your data via open banking. It's theoretically it's one click, it's easy, but in the weeds, you're like we did tons of mistakes. For example, with open banking, you cannot easily know. Let's say I have I don't know, my bank accounts at Société Générale. I grant you open banking access. You would get access to all my Société Générale account.
Yeah.
So if I have two businesses, you would get the two.
Okay.
And so we used to underwrite a business potentially based on multiple businesses accounts.
Oh, gotcha.
And this is not good.
Yeah.
So that type of thing. Then I think we made a lot of mistakes in terms of categorization. So for us, a very important thing to be able to assess, it's your revenues, your expenses, and your margin. And so every incoming transaction is not revenue.
Yeah, of course.
So we started by categorizing when you see augmentation de capital, it's a fundraising. So we're like, okay, we're smart guys. When you see like a loan, it's a loan, it's not revenue. Okay, but then we miss the corporate obligation emission. So we lent too much to a company that got like a lot of incoming transaction of corporate obligations, and we're like, they're doing a lot of revenues, but actually it was debt.
Yeah. Okay.
And so, I mean, all of this. I mean, what I like about fintech is that it's really like a long tail game. You need to fix the long tail cases, the long tail bugs that can happen, and so it's a work of accuracy, if I may. So at the end, it's a work of you're building watches, almost. This is very fun.
Yeah. Well, I mean, and again, so for the record, so you had an 800 million line of credit, right? That grew up to, you got an extra 300 this year?
Yep.
Is that what it is? So 1.1 billion, and you've already passed the $1 billion euro mark for what you've lent, right?
Yeah.
So this is huge. So you keep growing, and again, like, it works and people do trust you. So it means that even though with these things that you're fixing, you're obviously not the only ones making mistakes. Banks do too, but it's insane to see how quickly it grows. And what kind of feedback do you get? Do you get feedback from the end customers themselves, because you're sort of like B2B2C in the end, or B2B2B, do you get just with the partners, or do you get the extended version? How do you deal with that, in terms of product?
So we get both. And for us, it's very important it's true to say that our main model is B2B2B. We get integrated with the basically SME platforms, and the end customers, it's the SMB. But we are not fully white label. Because at the end of the day, even though we offer embedded experiences, it's important that the Defacto brand comes up when the SME is accessing financing. That's because in credit, the good customers, you need to build trust both ways with the good customers.
Yeah.
You need to trust your customers thanks to your underwriting, because I'm lending them money, and so we need the money back.
Yeah.
But what's interesting is that it's also the other way around. It's that good SMEs, good customers, like a CFO of an SMB, his job is to find the right financing solutions and the right financing partners that would be able to grow with the SME on the long run, that would be here in the next 5 to 10 years. And so you need to build trust both ways. And unfortunately, there are quite many startups that attempted some stuff in the B2B lending ecosystem that failed. It's quite easy to grow in lending because you just give out money, and it's quite easy to fail too.
Yeah.
And so building your brand, even though you offer embedded experience, it's important.
And so how do you find a decent partnership?
Yeah.
Because this is like what you're saying essentially also is finding the right partners, because it goes both ways, as you said.
Yeah.
So finding the right partners and integrations is actually where the value is.
So finding the right partners, but also building the good relationship with the SMEs.
Okay.
And so back to your question, so we have about 70% of our business that is through integrations, but also 30% of the business with direct SMEs.
Okay.
And for us, it's very important to, I would say, keep our feet, keep a direct touch with the market. Because even though we are B2B2B model, at the end of the day, we are building financial products for SMEs.
Yeah.
It's great to have the best API on the market, which we do, but if the underlying product is not what SMEs want, it's useless. And so the positioning that we want to have is that even though we are distributed by some penny lanes, Salesy, Sage, etc., we have to understand their customers' needs better than they do. And that's why we really want to keep a direct touch with SMBs to understand, keep building our understanding of what creates working capital, how do SMEs assess alternatives, how to build retention with these guys, and not be, I would say, like a backup solution. That's all the things that you want to build on the long run to be able to have the widest, I would say, customer base.
Okay, and wow, that's super interesting. And so, what's next for Defacto? Like, from where you are right now, what does scaling look like?
Yeah.
At this point.
So first of all, scaling is what it does not look like is scaling in terms of headcount. Today, we are less than 30 people in the team. We will maximum be 35 to 40 people next year, even though we want to do more than 2x on the top line and on the bottom line. So it means that we will need to marginally improve the automation of the systems. It means that we will need to go further into the long tail of edge cases that can happen. And so this is basically building the infrastructure.
Gotcha.
Building the infrastructure in terms of reliability, in terms of edge case management, in terms of security, in terms of scalability. And this is like a big portion of the efforts. Then what we are currently working on is, I would say, embedding more and more financial products to serve more and more use cases. And as I mentioned, so we get a direct touch with the SME market. And so working capital, you can either solve it by allowing your customers to pay you quicker, but you can solve it by paying your suppliers later. And within those two, I would say, areas, there are many, many products that you can offer. There is like factoring, invoice discounting, reverse factoring, supply chain finance, B2B BNPL, all these, I would say, sub-products. We want to be able to deliver those with the same platforms to the same ecosystems. And then once you have this matrix, you want to replicate it at the international level.
Wow. And so, yeah, maybe a super quick word on how do you manage to make this work on an international scale? Because how do you deal with, the differences between each country and how
do you select them by, like the least different from what you have right now, or how do you decide to open something new?
So it's a unresolved question from the industry, in a sense that there are very, very few players that make it at the international level. Fintech is a pretty, I would say, regional play. Even when you look at, for example, the Stripes of this world, so those guys are more like on the payment side of things. Payment is inherently more international. But when you take a look at their product offering in the US and you compare it with what they have in Europe, the European ones, it's pretty scarce, actually. So even for the largest payment platforms, it's pretty hard to replicate their product offering in multiple geographies. So it costs a lot for a fintech to expand to a new geography. That being said, so our ambition is to be the first pan-European credit infrastructure. And even when you look at banks, actually, so you don't have like a BNP in Germany. Maybe you have BNP CIB, of course, that is more worldwide, but the retail part of the bank, it's pretty local, actually. Even JP Morgan, you don't have JP Morgan in France on the retail side, which is the largest bank. And so expanding is hard and costs a lot. And so our take on that is that we want to expand within the EEA as quickly as possible because it gives you a good homogeneity in terms of payment rails, in terms of regulation, in terms of somehow payment habits. So that's one thing. Second, we want to expand with, I would say, our French partners who have a footprint in those markets so that we don't have to build like a new brand. We don't have to build local branches. And we just expand with those guys, which we have started doing, by the way. And then we will address, I would say, local players, local vertical SaaS that want to offer embedded lending to their own customers. So that's how we approach this.
Awesome. Thank you so much for all the insight. I guess I'd have 3 super quick questions. Is there any advice that you would give? I feel you're a very good 0 to 1 person. Like for founders, what would be your advice throughout everything you've been through? Best advice to give.
I've done 0 to 0 too, huh? And 1 to 0 as well.
But you've done 0 to 1 as well, and it worked pretty well.
Wow. One advice, I don't know, it's takes a lot of energy. So you need to think about how to maintain good energy levels on the long run.
And is there any book or advice that stuck with you? Doesn't have to be product though.
Yeah. So I think I really like the book, Monetizing Innovation. So like I'm more like, like a engineer product guy, if you want. So I like to think about how things works, like build the things. But actually, if you don't price it, it's useless. And so I think it was one of my last, my last year at Spendesk, I spent a lot of time, thinking about when you launch a new feature, how does that change incrementally the pricing of your offering? And so thinking about pretty early on about pricing, feature packaging, plans is pretty important.
Okay. And last question, what's the one quality you look for in a product person that you want to hire?
That they test products randomly.
Okay. Right on. No, but it sounds, for certain profiles, it sounds obvious, I'd say.
But it's not the case of everyone.
And most people don't do it.
Yeah.
It's you read it in the books, but just most people don't do it on a daily basis. So it makes sense. Thank you so much.
Thank you.
Thank you so much for being here, and thank you for all the insights. I'm glad to have you on this podcast. And
Thank you very much.
And I'll give all the links to Defacto if people want to join your team.
Great. Thank you.
And that's a wrap for today. Merci beaucoup for listening to this episode. Jordane's journey from a failed first startup to building a unicorn and now disrupting a 3 trillion euro market proves one thing. The most successful companies aren't the ones with the most employees, but they're the ones with the most discipline. If there's one thing you take away from today, let it be this. Get out of your building. Your code doesn't matter if you're not solving a human problem. And I'm also curious. Jordane mentioned his opportunity cost of leaving Spendesk before he hit unicorn status. Have you ever walked away from a sure thing to bet on yourself? Drop your story in the comments. I'd love to hear your bet on yourself moments. And if you're a founder looking to bridge your working capital gap, or if you want to join Jordane's elite team of 30, all the links to Defacto are in the description below. Make sure that you subscribe to the channel. It really helps us grow and bring you more guests. I'm Cedric. This is The French Product. À bientôt.